And another one. All right, MIN on the Toronto Stock Exchange, Excelsior Mining Corp. And this is one of the latest stocks on the US scanner from stageanalysis.net. And let's check it out right now, man. Got my 10-year monthly candle, which I will apply my classic chart trading framework. That is to confirm the trend, the higher prevailing trend. So whatever you do, no matter what framework, say you're on the daily, you apply your framework, and it's okay, breakout. Always go on the higher prevailing trend, higher prevailing candle, larger candle on the weekly, on the monthly. And apply your framework or another framework and get a confirmation of a breakout or breakdown and see if it's in harmony with the direction you're playing on that small time frame. And that will alleviate a lot of worries. If you get pullbacks on your time frame, but you know the higher prevailing trend is in your favor, then that pullback will just be a pullback, probably on low volume, and go back in the direction you want and not a reversal. And this is how I draw my lines right here on the closes, opens and closes. And right now I just have one here. This looks like maybe an ascending triangle. Very hard to tell on the monthly. Monthly, there's a lot of noise, is reduced. So you get mostly horizontal breakout patterns. And now this is what I'm seeing now. I think there's a breakout here on top above the 130, above the 140 level. We had a breakout. 135, 134, 135, we have a breakout. A few more days left for the monthly candle close. If that candle can close below that level, then on the monthly candle chart, I would have a breakout with the measured move being height to bottom of the formation added to the breakout line. There you go. And that's another one of my emotion management techniques. Make sure you have a lot of black space around, above, and under. Try to center the price action, the pattern you're looking at, and it's gonna help alleviate bias that you might have that the chart could imply. I always use that example. This looks like maybe it's a top, so it can only go down, and this looks like a bottom, can only go up if it's like that. But when it's in the middle, just that black space, it creates a canvas backdrop where you could just imagine all the possible scenarios. And I'm going to put an alert here just in case the monthly candle closes below, and then I'm within that range. And who knows, maybe in a month or two, it's going to be the breakdown level at 106 is going to be hit or tested. But right now, we're breaking out, and I'm going to go on the weekly, 5-year weekly candle chart and try to apply Stan's framework. I have the ADX, which I used, which I'm going to use for scanning, and anything under 20, usually it's a stage 1 or 3. It means that the trend has slowed down, and when you see above 20, it means the stock is trending nicely, like in the stage 2. And when it starts going down, it means the trend is starting to slow down. Don't need that to apply Stan. It's just for screening purposes. I have the RSI going from midway upwards. Okay, the volume. Okay, smooth. Whoa! Look at that volume. That is crazy. That is way more than twice the average of the previous 4 to 5 weeks. So this is a definite breakout à la Stan. He had a stage 1. He went up the hill, stage 2. And this was a pretty nice stage 2. 1, 2, 3. This breakout candle right here. This one right here. Wow, what a breakout here. That's beautiful. Beautiful Stan breakout. Can I get a straight line? I'll try to get a straight line here. Breakout candle. This one here. How the RSI look. Going upwards. And horizontal breakout line above the 30-week moving average with the volume twice the average of the previous 4 to 5 weeks. I don't have the Mansfield indicator. I'm using the RSI. It's still trending upwards, so for me that's my confirmation. 1, 2, 3. And the Ichimoku cloud is an additional confirmation. You want to be above the red cloud. You don't want resistance above, so you're all set there. And let's just see what it looked like on the monthly. Wow, look at that right there. So even on the monthly, you had a candle close above the breakout line. And actually, it was this big pattern right there. This was the monthly candle breakout. So there you go. Broke out here. And that's one of the advantages of Stan Weinstein stage analysis. There you go. On classic chart trading, measure and move applied to the breakout line, target reach, I'm out. When I entered here, I have put my stop loss right below that breakout candle's wick, and I put my profit limit at the measured move, and lock and load, I move on to something else. But look at that, oh, this huge stage 2 now you would not have entered. You would have had to wait for this pattern, consolidation rectangle, and after that you would have had to play the additional the breakout from there going up. But at a Stan, you would have been in there all the right here. You would have still been in. You would have added on the breakout here. Is there another breakout candle here? Yeah, it's hard to tell the volume. There you go. There's another breakout candle right there. And that's it. There. Oh, this one here, the other one. So a lot of volume on the, not quite sure that's the breakout candle. But on the following candles, you didn't have the volume to follow it. So you might not have been able to play this continuation move, but that's a classic Stan move. This goes up, consolidate, gets closer to the 30-week moving average, and then usually you get a wick, a candle going out with a high volume, RSI or the Mansfield going up, and then off you go. So that's a pretty nice. Start here, add on here if possible, and then exit either at the 30-week moving average if when violated, or trendline violation for half your position off the table and the remaining half at the 30-week moving average, or add a pullback. So usually I look at the RSI. When I see a V shape, I know that the price action went down, back up, and you put your sell stop right under the low of that, below round number, when the price action starts going near to previous highs. And that's pretty much it. All right, let's look what we have today. What do we have? We have this breakout candle. Tomorrow is, well, today when I'm posting this is going to be Friday, last day of, not Thursday, the 26th. So there's Thursday, Friday. Let's see how the price action, if it comes back inside under the breakout line or stays above and with that high volume, then it's a definite buy. Definite stage 2 continuation. Stage 1, stage 2, stage 3. So this would be the classical example of a stage 3 continuing into a stage 2 instead of going back into a stage 4. I know it's a stage 3 because all these, the wicks, the candles closing below 30 average on multiple occasions, it's not a stage 2 anymore. Stage 2, you're above. Sometimes you could tolerate wicks going through. If it's really aggressive, you stay in the trade, bouncing off. That's stage 2. Breaking down through here, you're exiting. So it's just definitely a stage 2 slowing down. And right now, staying below like this is definitely stage 3. But what that permits us is a sideways move. Chart morphs, creates a nice launching pattern, nice top pattern. Continuation pattern there. And off we go to the races. Cool. All right, nice one. And I'm going to keep that chart open and come back to it at the end of the week and maybe even at the end of the month, a few days later. All right. See ya.